All right. Hello, everyone, and thank you for joining us throughout the day here at the Lytham Partners Fall 2024 Investor Conference. My name is Robert Blum, Managing Partner of Lytham Partners. And during this presentation, we welcome Jewett-Cameron, ticker symbol of JCTCF on the NASDAQ. And joining us today from the company is their Chief Executive Officer, Chad Summers. Before I turn it over to Chad, I just want to remind everyone that management is available for one-on-one meetings throughout the conference. If you've not already scheduled your one-on-one meeting and would like to do so, you can shoot me an email. That's Blum, B-L-U-M, at lythampartners.com, or visit the website, lythampartners.com/fall 2024. From there, you can click on the investor registration button to make your one-on-one selections. If for some reason we can't schedule the meeting throughout the conference here, certainly look to get you scheduled afterwards. So, Chad, thank you very much for your participation in the event, and the floor is all yours.
Well, thank you, Robert. I am honored to be a part of Lytham's investor conference here today. Excited to introduce everyone to Jewett-Cameron. I'm going to share a bit about who we are, what brought us to where we are, and most importantly, where we're going and how we plan to get there. Of course, I'll be making forward-looking statements during this presentation. So as you well know, these are not guarantees of future performance and involve risks and uncertainties. So please reference all of our SEC filings for our risk disclosures. My guess is you've never heard of Jewett-Cameron, and I would say you're not alone. We've actually been around for 70 years and been traded on NASDAQ for the last 28. Basically, what we do is we design, source, commercialize, and distribute a number of functional products primarily for backyards. Our mission is to improve the lives of professionals and do-it-yourselfers with innovative products that enrich outdoor spaces. So I'm going to share with you today our path forward to drive shareholder value. Most of our products are professional and consumer-oriented and sold through retail. We do have a lumber trading subsidiary, however. It's a small counterbalance to our consumer products goods business. We refer to it as our industrial wood products category, and it primarily sells specialty panels to OEMs, such as bus manufacturers. However, the vast majority of our revenue is driven by our fence category, and I'm going to detail the metal and the wood products that make up that part of our business in a moment. Our second biggest category here is our pet containment products made up of kennels and crates. And then finally, our newest category of sustainable products, relatively small revenue generator today, but it does have solid potential. Here's a high-level summary of Jewett-Cameron by the numbers. With a $17 million market cap and nearly $50 million in revenue, Jewett-Cameron's got good bones. I mean, we have a solid foundation to build upon. We have great products. We have great customers, great supply partners, generating a stable revenue for the last 7 decades. You can see here that our company is profitable. We don't have debt. It's currently trading at a discount to book value. And I'm going to detail more about how we're positioning it to increase profits here in the future. In the following slides, I'll detail our products so you have a better understanding of what they are and how they differentiate themselves in the marketplace. So starting with our largest category, our fence products, they're divided into both cedar fence boards and then all of our non-wood fence products. So technically, Jewett-Cameron was founded as a lumber brokerage business, and it continues to trade lumber today. For many years, we've actually been a secondary supplier of fence boards to major home centers, providing Western red cedar pickets. It's generated about a third of our revenue and averages around 16% gross margin, which is typical for commoditized lumber traded products. But the rest of our fence category is made up of innovative metal and fence products, which generate an average of about 38% gross margin. I could easily spend the rest of this presentation highlighting all the great features of each of these products, but I'm really going to resist here and just describe them briefly. So as I mentioned earlier, we really do design, source, commercialize, and distribute our products. So many of them are patented products. All of them are well crafted, really designed to solve a problem for both professionals and do-it-yourselfers. So starting with our best-selling product, our Adjust-A-Gate. It's a full-frame steel adjustable gate kit. It adjusts to perfectly fit your gate opening and includes a truss cable that can be easily adjusted to prevent your gate from sagging, so it always opens and closes without issue. We also offer a patented adjustable chain link gate under our Fit-Right brand, and it comes in both galvanized and black, and it also includes that truss cable to prevent sagging. The patented lifetime steel post was designed and introduced in 2017 to address the common fail point in many fence, which is a rotting fence post. I'll share more later in this presentation how we're growing our fence category through the explosive sales of this particular product. But I'll go on to explain our Eurofence, which is our high-end fence made of wood composite plastic and aluminum posts. These are custom orders offering a variety of board colors and design options. The fence is really designed and built to last and requires minimum maintenance. And then finally here on this screen, our perimeter patrol. This is our temporary, highly portable security fence used by home centers for their parking lot and by major construction to parking lot sales and by major construction to protect their job sites. We've even received feedback recently from one of our customers that it decreased shrinkage or theft of products by over 30% for them. The photo here is being used around a beer garden for a Doggy Dash Fun Run event in Portland, Oregon, where we've donated it for their use in the past. Now, our second largest category is our pet products. We introduced our Lucky Dog brand in 1995 and have carved out a really healthy market share of quality, affordable pet containment products to provide really a safe space for pets. Our line of Stay Series welded wire kennels maintains one of the highest customer reviews in its category. These products also generate an average of 38% margin and are sold through member retail like Costco, as well as home centers and distribution. We'll be launching a new and improved chain link kennel in a few months to address some of the common complaints around chain link kennels with quality and assembly difficulties. So definitely keep an eye out for this. Currently, our relatively small contributor to our overall sales is our newest sustainable product category. It's clear that demand for sustainable products is growing, and we see a path for this to be an impactful category that will also combat the seasonality of most of our other outdoor products. We also offer a subscription service for these products so customers can be set up to receive what they need on a regular cadence and never run out, which is pretty unique for our business. This product can be sold through retail, grocery, home centers, and distribution, and generates a 30+% gross margin. We've actually obtained extensive third-party certifications, as you can see down there along the bottom of the slide. It was really to combat the trend called greenwashing, where products claim to be environmentally friendly, but actually are not. So while consumers are sustainable product driven, people don't want to compromise quality just for an environmentally friendly product. I would say this is especially true when you're picking up dog waste. As you can imagine, a bag rip can create a very unpleasant mess. So our proprietary My Eco World, compostable, and our PCR products are really designed to perform while providing this desirable alternative to traditional single-use plastics. So if you haven't tried them yet, I would encourage you to check them out. Many people actually claim they like them even better than the plastic bags they used to use. So I'll highlight a little bit more about our Greenwood subsidiary and how it fits into the bigger picture. Remember, Jewett-Cameron was founded as a lumber brokerage business and was originally called Jewett-Cameron Lumber Trading Company. We acquired a lumber trading business in 2002 called Greenwood Forest Products, and then later renamed it Greenwood Products. So while a relatively small contributor to our overall sales today, it does maintain a great reputation in its B2B markets, and it provides a nice counterbalance to our dependence on consumer product goods and the rest of our business. It does sell specialty wood products to OEMs and generates a typical lumber brokerage average of 17% margin. And the most significant product is our proprietary noise-reducing panels for buses called DB Ply. This innovative solution actually mitigates driver fatigue by reducing vibrations and noise, and is often really preferred by bus manufacturers. It's interesting to note that bus manufacturing went downhill a little bit during the pandemic, but is since rebounding and is projected to grow, which will actually increase our demand for our bus flooring panels in the year ahead. Greenwood also has the capability to increase sales in other specialty products. So, how do our products compare to others in the marketplace? Well, we strive to position our products for value. Great quality products at competitive prices that can move volume through our channels. So this illustrates how we want our products to compare to competing products based on quality and price. For example, most of the steel frame gate kit competitive products on the market today are primarily simple four-corner gate frames that don't have a truss cable to prevent any gate from sagging. On top of that, many of these gate kits are incomplete and they lack hinges, strikes, and or latches, forcing customers to go buy other components to complete their gate project, which, by the way, likely won't match their color or finish of the corner brackets. So our original Adjust-A-Gate full frame steel gate kit in the upper left-hand corner has not experienced much direct competition, but it is preferred by many fence installers for its performance and its price. I'm super excited to introduce our newest gate kit called the Adjust-A-Gate Unlimited, coming out in the next few months. It will be the only fully complete four-corner gate solution on the market with that no sag technology. Additionally, it's low profile, so people will notice your gate, not your frame. And it can accommodate various fence styles, including the horizontal, as shown in that photo here on this page. As an example, on the pet product side, our Stay Series kennels, they are one of the highest reviewed products in their category, and they're also very competitively priced, delivering exceptional quality. So now I'll share a bit about where we started and what brought us to where we are today. As you would expect, our company has evolved quite a bit over the last 7 decades. Much of that time, it was founder-owned and operated. Scrappy roots, cobbling together an eclectic combination of businesses with aging technology and operations that would not be able to scale. But a history of great products, great customers, and a consistent profits. Our last 5 years is a story of resilience, overcoming extraordinary challenges that I'll detail more in the following slides. We've made great improvements in key areas over the last few years, and we have a clear plan for increased profitability moving forward. So first, I'll highlight our performance by category, our revenue performance by category from pre-pandemic to now. Starting with fence, our most significant revenue generator, you can see there in the gray bars the fluctuation that lumber used to have into our revenue generation. but it's starting to stabilize with our new consignment program and should hover around the $15 million range moving forward. The high margin metal fence products have grown substantially since 2019 and play a significant role in our growth plans, and I'll go into more detail on that shortly. The pet has declined since the pandemic peak for multiple reasons. One of the contributing factors was market-driven, slower downstream sales that caused our customers to delay in reordering from us. This clog appears to have started to correct itself, and we do expect to see sales growth in the future, especially with our new chain link kennel launching later this year. Our sustainable and industrial wood categories are much smaller, as you can see, but they are both also poised for growth. So, what are we doing to chart a new path forward? The board of directors and my management team are focused on driving profitability and improving shareholder value. While we have faced our share of challenges in recent years, I really did step into this role to address them head on, and we've crafted the strategy to drive improved profitability. Our balance sheet actually tells that story of our progress to date, which I'll touch on later. But our strategy moving forward is focused on the following: growth drivers, operational efficiencies, continued product innovation, and also monetization of our property asset. So I'm going to touch on each of these in greater detail in the following slides. So our biggest and most impactful growth strategy is scaling our in-aisle displayers in home centers. So there are over 4,000 stores across the country between Home Depot and Lowe's. Our Adjust-A-Gate displayers are in close to 3,000 of these stores today. With our new sales representative partner, Continental Sales and Marketing, we anticipate improved presentation and replenishment of our gates that we expect to see and drive increased gate sales. But more importantly, since our initial launch of our new steel post displayer in just one region, just a few short months ago, we were able to get into 100 stores by the end of August in multiple regions. And now we have a number of other regions clamoring to get this into their stores, and we are driving to add hundreds of more over the next 12 months. It's important to note that while each fence project may require 1 or 2 gates, every fence requires dozens of posts. So each displayer holds roughly 24 to 48 posts of each finish and size. So for reference, a single 150 lineal foot fence project would require approximately 24 posts. In some parts of the country, our posts can actually be machine driven into the ground in less than 30 seconds with no need to even dig a fence post hole or add concrete, which of course can both save time and even prevent some back injuries. The initial performance of our steel post displayers in store indicates this program will be a significant contributor to our fence category sales in the year ahead. Our second most notable growth category is really optimizing our online efforts through our website, social media, and our third-party online sites. The significant transition in the way that pros and DIYers research, purchase, and even acquire building material demands that suppliers like us continually update digital assets. This includes product images, video content, technical information, and also invest in distribution capabilities, really for the result of driving a seamless shopping experience for the end users. The big box home centers, building material dealers, and co-ops that we sell to actually require their supplier partners to participate in these areas and improve their proficiencies in delivering products efficiently to the end user. Additionally, social media is overwhelmingly the preferred format for pros to showcase their handiwork, whether it's a fence installer posting photos of their latest project on Instagram, or a remodeler investing in SEO to drive potential homeowners to their website, we are actively participating in all these areas with the objective of being a preferred and available solution when it comes to fencing and gate installations. Our third growth strategy is to enhance our engagement directly with professionals to increase the demand of our products. We are targeting regional fence installers in key markets throughout the country, and really are going to equip them to become ambassadors and influencers for our products. This will provide us with direct access, by the way, to the voice of the customer and what challenges they face that will influence our ongoing product innovation and the solutions we want to offer the market. We want to ensure that our products are available where they prefer to purchase, be it their local retailers or their distributors. And finally, scaling My Eco World is our fourth growth strategy with incredible potential. Now that we have a full line of products, including compostable bin liners, yard debris bags, pet waste bags, as well as our post-consumer recycled bags, we have a great family of products to offer a variety of channels. Our products continue to outperform the competition, and they're really priced competitively. Our customer reviews are top-notch, and we look to capitalize on the growing demand for these sustainable products. This category should become a notable contributor to our business over time, as not only the demand for high-performing sustainable products grows, but also the increasing plastic bans being legislated throughout the country. On an innovation front, we have a robust product roadmap laid out over the next 12 months. It's a mixture of new products and enhancements to our existing products that are expected to contribute to the bottom line. I'm incredibly excited about each of these products listed here, and that are truly innovative, new and improved product offerings. I would suggest you keep an eye out for these product launches throughout the year ahead. In addition to our growth strategies and the innovation, we are also focusing on supply chain and operational efficiency strategies to mitigate our risks and improve our bottom line. We reported actually last month that we had completed an 18-month initiative to multi-source all of our imported products. Previously, we had over 80% of our imported steel products coming from a single supplier out of China. And now we've established great new supply partners in multiple countries. And this, of course, will help us mitigate the continuing pressures on tariffs, on our cost basis, and help us remain competitive in the marketplace. Another operational efficiency initiative is our multi-year effort to expand our distribution capabilities. So we are located up in the Pacific Northwest, which is not an ideal location for distribution, especially for bulky and heavy products like ours. It's expensive and it adds extended delivery time. So we'll be transitioning our distribution to a 3PL model in key locations that will not only improve freight costs and time to delivery, but it'll also open up new sales opportunities previously limited by our Northwest distribution hub. And then finally, we seek to monetize our non-core assets to enhance our working capital. Our seed company property is in a great location with high quality warehousing space readily available, as you can see in some of those photos. The board of directors is strategizing how we want to put the capital to best use for the benefit of both shareholders and businesses alike. And we'll go ahead and communicate that plan when the property is sold. So I'll wrap up the presentation by highlighting our financial trends over the last 5 years. Here you can see our revenue peaks through the pandemic, bolstered by the pet and home remodel boom. Our post-pandemic sales do remain higher than pre-pandemic, and the growth strategies I just presented are focused on our margin-generating products, expected to grow this fiscal year. On this page, you can clearly see the significant impact of our fence category, with about a third of our revenue driven by the fence pickets, and our largest contribution coming from our metal fence products. Pet historically has been a higher percentage overall, but has dipped post-pandemic. Our growth initiatives are really focused on the margin-generating products of metal fence, the new kennel innovation, and expanding the sustainable product sales. As far as distribution channel, we do maintain a strong presence in retail, both in-store and online, and we expect to grow in both. Distribution and B2B offer great potential for new growth, especially with our initiative to enhance engagement with the pros. Margins have been impacted by a number of factors, and we've implemented strategies to address these moving forward. For example, we are mitigating the impact of the tariffs out of China by sourcing our products from non-tariffed countries. Another example is our increased warehousing costs, which we are actively diversifying our distribution capabilities to offset those costs and open up new sales opportunities in the future. Other impacts include steel pricing, container cost, and even domestic fuel prices. And our strategy to mitigate these impacts on margin is a management initiative to analyze our pricing structure to better protect our margin against these fluctuating external factors and get ahead of them. And here you can see the positive impact from the pandemic growth on our net income. And I've really already addressed all the initiatives in this presentation to drive growth, efficiency, and improve our net income results moving forward. So I like this slide. I'm extremely proud of our balance sheet improvements since I assumed the role as CEO. Now, I stepped in really mid-pandemic with extraordinary tariffs on our products. Supply chain costs were off the charts and the highest inventory the company had ever had. You can see here we've reduced our inventory by 34% from our peak in 2022. And more importantly, it's mostly the right quantity of the right products that are fast turning. We do still maintain a chunk of slower moving pet inventory that's heavily burdened from the high supply chain costs during the pandemic, which creates a cost competitive challenge as pet products begin to rebound. It does continue to sell, and we are pushing to sell through it to fully right size our inventory position. You can also see here on this page our property, plant, and equipment. It initially increased due to our office remodel. The recent decrease is due to asset sales of equipment at the seed company and, of course, standard depreciation. It's also worth noting here that the seed property market value is worth substantially more than the book value represented here on this page. Our borrowing increased dramatically in the years following the pandemic. However, we fully eliminated our bank indebtedness in fiscal 2024, and we actually haven't borrowed since November of 2023. So I'm incredibly pleased to share as well that our accounts receivable is 98% current. We really are transacting clean business and ensuring on-time collections. And again, you can see here that our stock is trading at a 32% discount to book value. I want to take a moment here just to highlight our management team that is responsible for charting our new path forward. Each is highly capable and committed to driving success for Jewett-Cameron. Over the last few years, we've even expanded our board and increased the professionalism over our early years of being a public company. These directors are passionate supporters of the company, driven to guide management to improve shareholder value. Each of them is engaged and supportive of our strategic initiatives. I thought I would take a moment just to highlight that every aspect of our business centers around the principles of crafted, stewardship, and legacy. We seek to offer quality products to perform with an eye for stewardship of our relationships and the environment. And of course, based on the old adage that culture eats strategy for lunch, our company core values of innovate, collaborate, and deliver impact every aspect of our business each and every day. We strive to continuously improve and solve problems for customers and differentiate ourselves. We collaborate internally as well as externally with suppliers, customers, and supply chain to provide the best products and services we can. But ultimately, all of this is designed to deliver. We want to deliver quality, deliver value, deliver results for both our customers and shareholders alike. So all told, Jewett-Cameron is in a great position. Over 7 decades of operation, we've, with proven resilience, overcoming the challenges of recent years, we maintain an impressive customer base, and we are who are demanding more of our products. We now have a broader base of quality supply partners working with us to continuously enhance our products, and management has developed a focused strategy to drive improved cash flow and improved operational efficiencies that will grow net profits. So thank you again for taking the time today to get to know Jewett-Cameron. Hopefully you have a better understanding of who we are, where we're going, and how we plan to get there. If you have any follow-up questions or you want to contact us directly, I've included my contact information as well as Robert's at Lytham Partners here on the screen. So thank you very much.
Chad, fantastic presentation. Thank you very much for the time here today. Just again, quick reminder before we wrap things up, if you'd like to schedule a one-on-one meeting with management, whether it be today or in sort of the days to come post a conference, feel free to reach out to me. Again, the email on the screen there or my direct email, Blum, B-L-U-M, at lythampartners.com. Or again, you can visit the landing page for the conference, which is lythampartners.com/fall 2024. From there, click on the investor registration button. We'll look to get you taken care of. So, Chad, hope you enjoy the conference here today, and thank you very much for your participation.
Thank you.